Welcome to another edition of The Real Money Show. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And at Guildhall Wealth, we deal in only physical gold and silver, which is what we're going to be talking about today. Of course, it's making waves into different markets, specifically crypto markets, as well as AI, which is we're going to talk about as well. For those that want to hold physical gold and silver as part of your portfolio, one of the things that we focus on at Guildhall is helping people to hold actual physical gold and silver in registered accounts where you own it directly. This is not a pool account. This is not a certificate. This is not an ETF. This is actual real ownership of your product held in a vault facility outside the banking system. So we have a motto: if you can't hold it, you don't own it. And this definitely passes the sniff test in that regard. You can even go to the vault and personally audit your holdings, which is still, to me, one of the coolest things.
Proof in the pudding.
Exactly. It still is a great thing for me. And we've been doing this for almost 10 years in registered accounts. So today is the 27th. Silver's trading at 53.37. Gold's trading at 41.58. Pretty nice move up in silver today. Is this the start of something, a line of trajectory we should get used to?
Absolutely. We had a good pullback the last couple weeks where silver tested in the upper 40s. Now we're clearing 50, and we're going to retest the 54 mark. So that was the all-time high that we tested about a month and a half ago.
Oh, we're not far away.
Yeah, we're not far away at all. But overall in the year, it's a good year so far. Silver's up about 80% year to date, and gold's up about 55-60%.
So a lot of the things that we've been having conversations with clients at the office is it over, right? New potential people getting involved in the market. A lot of our clients, people are wondering, okay, it's at all-time highs. Is it over? And of course, when you start to look at all the fundamentals and all of the things that are going on in the world, you realize, no, we're nowhere close. And there's a lot of different things we can get into on that topic alone. However, let's start with the cryptoverse, because this week, actually in the last couple of days, one of the world's largest stablecoins made headlines for something that would probably make most crypto people kind of upset, which is that Tether is now holding more gold than some small central banks.
Can you believe that?
Hungary and Korea. Not North Korea, but Korea. That's how much gold they're holding. Before we get into this, so people can understand the importance of this and what it can mean to the potential of gold going forward, what is Tether exactly?
So Tether is the world's largest stable coin, and it's used as a bridge between when you trade cryptocurrencies, whether it be Ethereum or Bitcoin. You would jump into USDT, which is the Tether. It's supposed to represent the US dollar, a cash position, and it's supposed to be backed one-to-one with U.S. Treasuries, and that was an issue. It's never been audited. Now it's it's a large market, larger than the U.S. Treasury market. So there was a lot of issue regarding that, the transparency behind it. In fact, it actually made news in July of this year, where Besson passed the Genius Act to ensure that this thing is backed one-to-one. And that's when they went scrambling to start buying some real collateral to back up the stable coin. The Treasury is, it's all fiat. So having this large stable coin now acquiring gold is a huge signal. And this is the demand. Demand coming into gold and silver is a big sign that entities, countries are looking to boost that side of the balance sheet.
So here are the numbers. We've got the Tether market size is 150 billion. They're holding 135 billion in US Treasuries. They're holding 14 billion in gold, or 116 tons, and they're holding 8.8 billion in Bitcoin. So for the in terms of the debate for you think about Bitcoin people, they're often telling you to sell all your gold.
Of course.
And now here's Tether holding more gold than Bitcoin. What does this say for the cryptoverse, that you have a company wanting to be stable, that they need to be, but that their choice for stability isn't necessarily Bitcoin, it's actual gold?
That's right. You have to back this asset, this currency, with something. It needs to be backed by something, what they called a relic or a tradition, with the very, what money is. Money is gold. Gold has survived for thousands of years as the most liquid asset class and the most solid. It's beyond language, beyond borders. Every single country is acquiring gold at an insatiable pace. And if you look at the demand coming from Tether, now acquiring about 300 million this year, buying into precious metals, buying into gold. It's the largest gold buyer right now in the world, passing Kazakhstan. And, this is the demand that we're talking about, why this market will continue to rise. The gold market and the silver market are not rising because of speculation, because of data, because of inflation. Those things are going to be there. The gold and silver market is a scarce market, especially silver. But the gold market is being reintroduced to the system, and then we're going to see a bridging. The old SWIFT system where money flows and people can get locked out and accounts frozen and countries can get sanctioned because they're on the SWIFT system. So this is an alternative. It's much faster. So we're leveling up, and we're now seeing emerging with money, with technology, and the treasury. So we're seeing a bridging happening here. So we have to follow this amazing trend.
Do you think that Tether holding gold can help bring people into the crypto sphere, or equally, do you think does it upset the crypto sphere that they're holding gold? I think it makes sense in terms of what I thought was interesting, by the way. Sorry to derail my own question. But this idea that they want to peg Tether to the US dollar, but the dollar has no peg. So how do you know what the value of the dollar is?
Right.
So their choice to do that is to say, we're going to hold bonds, we're going to hold crypto, and we're also going to hold gold. And if we hold all of these three things, we'll have these three pillars that are to give us stability in the market. So I found that very interesting that you can't get quite a peg unless the U.S. was pegged to something, which it's not.
Right.
So their idea of you can't peg something that's completely free-floating as of right now.
Right.
But do you think that having gold brings people to the cryptoverse? Equally, do you think it makes people who are in the cryptoverse think a little bit about the advantages of having gold?
Well, I think, the debate, I think it's over regarding where it gets its value from, where these cryptos get its value from. And with Tether, calling it a stable coin without a true and proper measurement or a backing of something, that was the risk. So I think it does introduce to the crypto space the importance of holding something that is actually tangible and scarce, so that we can measure up and actually find value for your cryptos, for your gold reserves, for your paper. Because the problem initially was the paper markets and the currency printing that has been going on for decades in the U.S. QE1, QE2. The Federal Reserve just printed another round of an injection of 130 billion. So they're just printing the currency. We have to measure it. Well, gold has measurements. We measure it to the M2 money supply. So we have a measurement of where we should be going and how much of that debt, how much of that tether needs to be backed up. So it's going to bridge. I think it's going to help with the understanding of what money is.
So on the demand side, this has been a pretty good quarter for Tether buying physical gold. Are there signs that this has stopped, or are they going to continue to grow? And if the crypto market and industry is going to continue to grow, then demand for Tether is going to continue to grow. So they're going to have to continue to grow their gold holdings as well, unless the price doubles or triples and keeps up in that regard.
Yeah, exactly. Now, here was an interesting quote from Vince Lanci this week. If China owns, and we have to keep an eye on China because there's a race for gold and there's a race for, I guess, global dominance. There's a race for stuff these days. There is a race for economic dominance. So China's been hoarding gold. They stopped the exports of silver. And he wrote, China owns its gold through its people. And the U.S. is now investing in corps it's deemed are important to the U.S. existing, including Tether. So this is what is being used by the U.S. to bolster their reserves, not just in Tether, but gold, because it's directly related. You're now backing your Tether with gold. You're pegging it to gold eventually. And then I think the next step would be introducing it to the treasury market and then U.S. adoption.
Yeah, I know China does encourage its citizens to own physical gold. We're going to talk about this right now regarding the U.S. and how they could be encouraging corporations to hold gold. I think for Canadians, we don't have as much gold in our reserves as Tether does, but we can buy it ourselves, right? And so the idea, of course, is that you, as the individual, can own physical gold and not just paper gold, not just have exposure to physical gold, but to actually own the physical gold. And that's what we help people do at Guildhall. So you can go to guildhallwealth.com and you can buy the product personally. You can come to the office, schedule an appointment, and purchase it direct, or you can use our e-store to do it. You can use our depository services so that you have ease of liquidity, whether you're traveling anywhere around the world, or maybe you're a snowbird thinking this time of year, let's go away, but you might want some liquidity. It's easy to sell on a phone call. And then, of course, the registered accounts that I mentioned at the top of the show. Let's talk about AI, because we now have an executive order about the Genesis mission. What is the Genesis mission, so that we can see just exactly how much silver is going to be used over the next several years and what that could potentially mean for higher prices?
Yeah, so just got passed this week. Breaking news, President Trump just signed an executive order akin to the Manhattan Project. We talked about it last time we were here on the show, how the U.S. for the nuclear bomb needed so much silver. The news is talking about this build out of AI, which is understandable. Everyone's really using it. It's replacing a lot of jobs. It's a big worry for people.
Or creating jobs.
Depends
what your perspective
Whatever your stance is, exactly. But the U.S., they just launched the Genesis Project, and it was an executive order by President Trump yesterday. And he said basically that America is in a race for global technology dominance in the development of artificial intelligence, AI, an important frontier of scientific discovery and growth. To that end, my administration has taken a number of actions to win that race. So we have to remember that we're talking about usages here. We're talking about building out something that requires material to build in the first place. And we talked about it before. We're talking about AI and ChatGPT and the data centers that are required to engine and power the processing of this intelligence. Every single data center that is open, you need tens of thousands of kilos of silver. Can you believe that? It's the demand coming out from AI. Now, we're not even talking about the other usages. We're talking about
like the factories,
semiconductors, power distribution, automotive, photography, all of these things. If you have a light switch in your house, there's silver in that light switch. But we're talking about scaling out something that is going to be a massive push to build out. A lot of economic analysts are wondering, how are they going to build this out? Economically, how are we going to finance this? Well, my question is, where are you going to get the silver from to scale out this AI project?
That's one of the reasons why they probably titled it a critical mineral, right? That's you can start to see the signposts there where we're going to get to this stage and we have to put things in place. We're going to need silver. It is critical to this. Rare earths, you can see the deals that have been made around the world to go after rare earths. I think it's an important mission. I think it's a noble one. I think it will bring a lot of jobs. I do hope that Canada gets in on the race and in on the success of it. I think we have a lot to offer to the United States in that mission. But of course, it is going to need a lot of precious metals. And it's not just in the United States, but it is a race around the world for it. So we know that the demand on silver right now, I was watching a video with Keith Neumeyer from First Majestic,
right,
and he ran the numbers. He's really good at all of those things. He said they're mining 800 million a year. They're using about 1.2 billion a year. That deficit's been running for about 5 years. So they're a billion ounces short already. And he was mentioning that, you can create a bigger mill, you can build a bigger mill, you can do more refining, but that's going to take money, and you need higher prices to do that. One thing I was struck this week regarding was in Canada. I was kind of shocked to hear this. We don't really refine anything here.
No.
We mine it and we ship it.
Just like oil,
Lumber.
lumber.
And I thought, wow, how come we're not part of that process? We follow Vince Lanci, a great analyst in the market, always talking about mercantilism and how these countries around the world are saying, look, we want part of the value chain. We don't want to just dig it and ship it, which is a very kind of British Empire colonial thing. We want to build it, produce something, and then ship it.
Jobs.
And be part of it, right? Create more
well.
jobs,
right.
et cetera. So I was kind of shocked that we don't even, we're the third or fifth largest gold, seventh largest silver.
Fourth in
oil. We
oil.
don't really refine it, except for the Royal Canadian Mint, I guess. Maybe some small mints, but we're small refiners. We're not refining. That's a lot of jobs that are missing and a lot of demand that we could be fulfilling by doing that. I digress.
No, that's a huge point.
We're going to need a lot of silver. There's a deficit. We have the cup and handle from a technical standpoint. What kind of prices are people considering for where silver could be going in this type of AI mission and new version of a space race?
Well, now that we're seeing, the trend moving from China stopping the exports of silver, hoarding gold, to the designation of silver being on the critical minerals list, to the move of this launch of the project, this mission, we're supported. So I think on the downside, we're very supported. You cannot sell a critical mineral. It's a mandate. It's a law now. You have to acquire and stockpile as much silver as possible. So we're supported in that regard. But when we look at other analysts, if you look at the silver to the M2 supply, for example, we're talking about multiple times higher. I think we were very supported. Next week, the U.S. will be cutting interest rates. That's another a tailwind for silver. It should push the prices of gold and silver higher because they're going to be destroying and devaluing the currency even more. We also look at Michael Oliver's, the momentum structural analyst, where we includes looking at the technicals regarding momentum. Now, his stuff has been focused on and highlighted through the Wall Street Journal. And he says it's not a slow climb. He actually believes a quantum leap is coming in silver. It's a permanent shift to new price ranges. He's calling for 100 to 200 silver within quarters. We're not talking about years. And gold is entering entirely into a new valuation paradigm. Because remember, we're talking about revaluation here. The U.S. needs to take their asset, which is a tier 1 capital. It's actually high quality liquid asset to China, so it's actually better than cash. Gold is that collateral. We're going to be watching this market. There's a lot of news about the repo markets in the overnight that's blowing up, Jeremy. This is stuff that took down the Lehman Brothers. It took down just before COVID when the lockdowns happened. There was a lot of price action in the repo market. It's showing signs of illiquidity. Liquidity is based on the collateral. What is the good collateral? What is the asset on that asset side of your balance sheet versus the mountains of debt? The U.S. has just passed, 300 some odd trillion in debt, or what's it? 37 trillion, I think.
When you think about
38,
the debts that are out there, I think back to when I started in 2006, and you're telling people, look, it's undervalued. Silver's undervalued. Gold's undervalued. I'm starting to fully appreciate just how undervalued they really were back then,
right,
and also how much more money people had, right, in the markets. I think that silver today at $50 is even more undervalued when you think about the amount of money that's been printed out of thin air, or currency and debt that's been created out of thin air. And so that's going to have to be dealt with, whether it's defaulting or the rise of gold. It's sometimes, the way I kind of think about it sometimes is you don't necessarily have to pay down the whole debt.
No.
If you have a $900,000 mortgage on $1 million property, you got sleepless nights. But if the property goes to $1.5 million, it's the equity.
Right.
The debt is not as much of a concern. In fact, you can now borrow against it, right?
Exactly.
And I think that's what they're looking at, and central banks are looking at when it comes to physical gold. I think silver, we were talking about more from an industrial standpoint. So I think when you start to think about how much debt there is, what it's going to take to level the playing field, because you could have you're going to need 25 years of 4% GDP
Yeah,
to
you
be
can't-
able to get to where you're trying to go here. So you need the assets to grow quickly. And I think that's what central banks are buying gold for. And then the benefit you get from it, because it's a high quality liquid asset, is to be able to borrow against it as it's rising and use it as collateral, right? Not the pension plan, but the gold.
Yeah. This is just it. The Canadian government just went parabolic with their mission to steal from us even further. Carney announcing that they're going to use pensions. So, with money being just Canadian money just being just digital ones and zeros on your computer when you log in, the time right now is to convert out of this currency of the loonie that has lost over 95% of its purchasing power since 1915. The trajectory is very bad right now in Canada, but there is hope. And I believe that with the resources that we have in Canada, when we unlock, things will change rapidly. However, we have to go through some steps.
Yeah.
Gold and silver are being reintroduced into the monetary system. And I think with the U.S., if they have to boost that side of the balance sheet back to maybe where it was prior to World War II or around World War II time, the gold represented 20% of the debt back then. And right now, the gold that they have in holdings represents 2% of the $38 trillion in debt. So how do we get back to the 20%? We're talking about gold revaluation.
That's
and
huge.
scoff at the idea because, to get back to 20%, gold will be around 25,000 roughly.
Right.
You can't scoff at the idea because I challenge you. I just want to encourage you guys to check out the federalreserve.gov website. Their latest paper is about gold revaluations. They don't talk about gold, but this is the first time ever the Federal Reserve, the Central Bank of the United States, mentions gold, but revaluing gold and how countries use their gold to fix all the fiscal mess that they were in. And no, they didn't have to sell the gold to dump and to raise cash. No, they just simply revalued the price. And it is very interesting. And it's very exciting to know this because our clients are going to benefit. Our clients right now are benefiting.
Yeah, I think, when we're talking about forecasts, which is where we've taken the whole show to get to this point, which is great. When you're thinking about forecasts, let's say Jim Rickards, he's a great author. He's done the math on these things, as you've talked about just a moment ago, in terms of percentages, right?
Yeah.
And he'll throw out a forecast saying, look, like you're going to need $25,000 gold plus to be in a place where you're leveling the balance sheet or balancing the debts, et cetera. But it's a lot to digest. It's really difficult for someone to conceive of those type of prices. Similarly, when I got into the business and so gold was trading at 400, and I talked to people saying, yeah, they think it's going to go to 1,000. You'd get the hand. Oh, yeah, it's not going to happen, right? On the opposite end of the spectrum, you have banks that are forecasting just out in front, right? Gold's going to be at, name the bank. Gold's going to be at 4,400 next year. It's 4,200, 41 something.
Always
right
conservative,
now.
right?
Maybe it gets to 5,000, right? That type of thing. So very, very
cool that
conservative.
Excitement. You don't get too excited.
But when you think about where we are right now at $50 silver, people are digesting that price. And they have to kind of let that sink in and say, yeah, it can go to 50. Because you have to start asking yourself, there's a couple of things that have to happen. One, you have to get over the double my money bias, right?
True.
That people have I doubled my money.
Take profit.
I'll take the profit. I doubled my money. That's enough. I'll take it off the table.
Yeah.
Just for its own sake. Listen, I love art for art's sake, but it's also better to have things for a reason. And so when you start to look at reasons, you say, what's been resolved?
True.
Have these debts been resolved? Has inflation been resolved? Has the dynamic of geopolitics been resolved? Is the middle class being hollowed out still, or is the middle class growing? That would be a resolve for me, right? Seeing these things. Are regular, everyday people working minimum wage, but able to do something with that minimum wage, right? Where it's not they're sitting there saying, this job isn't paying me enough to care, right? There's a lot of things,
right,
anecdotally and statistically, to say it's been resolved. So that's the first thing. Get over the double bias. And then the second thing is what has been resolved. And I think when it's going to be a process. Revaluing gold is a process that you're just going to see the prices move higher and higher, and just keep asking, what's been resolved? And that's what we're here for, to discuss the fundamentals. And from the silver perspective, it's really about the industrial demand. So where's that headed? And is there an ultimate, like, give the audience a crazy price, and then we can talk about what the bank's conservative price is, and then it's maybe somewhere in between.
You know what, with the silver forecasts, having silver being designated as a critical mineral, that's huge. We really have to really build that as the foundation here, because you're not selling physical. If you do see the prices jump around, it's because of the paper markets, and the paper markets are right now about to erupt. The paper markets are frothing. They want another round of money printing, which means nothing has been solved. And the solution before was just print a ton of money. But this time around is not going to work. This is why the gold and silver are the focus for being collateral. Yeah, silver is industrial, but it's also being used as collateral in places like India. They've reintroduced it to the monetary system. And as we look at cycles, you brought up Jim Rickards. We are actually in the third cycle of the super cycle. We're actually in the third super cycle of precious metals, which is very exciting. It's pointing to by next year, according to Jim Rickards, silver should be anywhere around 490 US per ounce. And what's very interesting by next year, what's very interesting.
That's pretty
out there.
Yeah.
Well, we have some cryptos into the 80,000 mark, and they really don't do much.
What does Michael Oliver say? So Rickards is saying multiple hundreds. Oliver's saying
$200 within a few quarters. Okay. So if we continue with that momentum and clearing hurdles of the support and resistance levels, it becomes very easy to do. Couple that in with the silver stock out. We had Daniel Galley from TD Securities, the head of commodities strategist there. He indicated that this is the one way to buy into the silver space. You want to own that, but you don't want to own the proxy. You don't want to own the certificate or some type of gold or silver scheme. You want to buy the physical precious metals, whether to take home through Guildhall, own it in your RSPs, go to the vault and visit. If you don't believe that they're there, go check them out and audit it yourself. But you want to buy into this because this is a once-in-a-lifetime opportunity, and people are worried about, well, if we're moving up, could it just pull back? Gold and silver, especially gold, has to be revalued and held there, and it's not a very new topic for many people to understand. A lot of Canadians today, if you go to betterdwelling.com, great website, just look at the top 5 headlines right now. Canadians have to renew. HELOCs are at an all-time high. The debt is surging, and the home is the collateral. And when people renew, they may have to fork out some more money because that collateral, that down payment, is too small. It's too little. So you have to fork up some more cash. But in this case, with the U.S., you can't just print more cash to add as an asset on the balance sheet. The cash was the problem in the first place. So we're talking about gold. Gold is there. They have the Gold Standard Restoration Act prepped and ready to go. The U.S. will be introducing this, and they have to stabilize that treasury.
Or
number
a version
one.
of it.
Or a
so,
version.
Jerry, as we wind down here, did we get to some of your papers?
I don't know. Let me look through.
Did we get to most of them?
Let me see here.
Well, I mean, we've covered a lot of ground this week, and we'll continue to bring more to the table. There's always lots of new things happening in the market, and we like catching all of these wins, a lot of these symptoms and symbols of, or signals rather, of the gold revaluation and that the demand for silver and where we see the prices headed that are supporting all of these arguments that you're hearing. So if you like what you're hearing, you can get a hold of us and we can walk you through the markets. We love holding people's hands and teaching them how to get involved in registered accounts, how it works. We help clients open their accounts. We help them with their funding, with their transfers. We're helping them track the whole process, and then their tailored purchases where we're helping clients figure out what's going to work best for them for today and into the future. So we love helping and having those type of conversations with our clients. And of course, it doesn't end there. There's always conversations along the way. Clients will bat ideas. They might see an article and want to discuss it. So our doors are always open. Our phones are always on, ready to take your calls. And that's it for another episode of The Real Money Show. We want to thank you for joining, and we can't wait to speak to you next week here on The Real Money Show.